Right. If you miss this, I will upload for a Google Drive link so that you can watch this. I will record this. So now we will be starting with accounting equation. So for the last time also they tested this question number 3 as the accounting equation. So important lesson is this for the accounting equation. So now first thing is, you all know in accounting there are 5 family members. One is assets, the other one is liabilities, then the other one is income, then the expenses, as well as the equity. Right? These are the 5 family members in the family which is called as accounting. Right? There are 5 family members. So now first thing is, since there are some students who are listening for the very first time about these things, so just keep it in mind. Assets means, so now you can use whatever the definitions that we have discussed previously, that means before the 2020. Right? So because from 2020 onwards, these definitions were changed. Right? If you refer, now from where you take this definition in accounting, you take this definition for the assets, liabilities, income and expenses. This will be taken it from what we call it as the conceptual framework. So conceptual framework is the place that where we take the definitions for this. So you might be wondering, so look here, conceptual framework, is it a accounting standards, not accounting standards? Before the accounting standard, the standard book having a separate chapter, so that's the conceptual framework. So I'm not going to discuss about this, because if you refer this 7 months program, conceptual framework also one heading. Right? Conceptual framework also one heading. Right? So once we are discussing the conceptual framework, we'll be discussing what are the recognition criteria, how to measure this, then what are the main features of this, the changes, what are the changes that there in 2020, and we'll discuss on that part. But for now, you just want to go through with what are the examples in here, right? So keep it in mind, assets means we say those are economic resources. The full definition I will be discussing with you once you doing the conceptual framework. Even for the last year, they tested the new definitions for assets and liabilities. Right? So important this time also. Definitely, Sumantha Madam would test this, because she is really good in these areas, like the technical areas, the new amendments. So that's why the SLFRS 15, the revenue recognition also so important. I will discuss in once we come to that lesson. So now assets means economic resources. I think everyone who is in this classroom at the moment, you might have done the economics also. What are the economic resources? So in accounting, what we say is economic resource means it is a resource which generates cash and cash equivalents. So just think it that way. So economic resources, there is a technical definition for economic resources also from the accounting perspective also. So that part we will discuss in conceptual framework, doesn't matter, keep it there. Then now here are the assets. So it is called as those are the economic resources. Assets are the economic resources, right? So economic resources means what they can generate the cash and cash equivalent. It should be the economic resources. So now we'll say what are the examples for economic resources for the assets. As an example, we'll say motor vehicle, it's asset. Furniture and fittings, it's asset. Land and building, it's asset. Debtors, it's asset. People who are listening for the debtors for the very first time, just keep aside for a moment. We'll discuss what's a debtor later on, right? Then obviously cash, it's a cash and cash also economic resource, right? So in Sinhala we say, ඔයාලා නිකන් හිතෙන්ති මල් හතයි වගේ නා, ඔයාලා නිකන් මොකක් හරි කියනකොට මල් හතයි වගේ නා. So that's the economic resource. දැන් උදාහරණයක් විදිහට කිව්වොත් එහෙම සල්ලි වැඩිපුර තියෙනවා නම් මල් 7යිද නැද්ද? මල් 7යි වට දැන් හිනක්. right ඔයා හිතන්න ඔයාට ඉස්කෝලේ යනකොට සවුන්දට එක කාර් එකක්. සවුන්දට අවුඩියක්. For the Tuesday you might have get a Benz. Wednesday you will go for the school to a we'll say Prada. So that means it's what? එක මල් 7යි. ඔයාට වාහන දවසින් දවස වෙනස් වෙනස් වාහන තියෙනවා. So those are the economic resources basically. So make sure in the tute also I have mentioned there, but they are the examples for the assets. So keep it in mind. I know there are some students who have been moved for commerce stream in this classroom, so they want to make sure they will take down these things as well as the tute itself is there. So land and building, motor vehicle, furniture and fittings, debtors, cash and cash equivalent, those are bit of assets. Then the next thing is liabilities. Liabilities. So liabilities are the obligations. Obligations, and as a result of the obligation, there will be transfer of resources. There will be transfer of resources. So assets we say in single we say mal hatai. Liabilities we call it as mal harudarayak wage namai, that's a liability in single. කියන්නේ mal hatai වගේ නම් ඔයාට කියද්දි that's a what? Asset. It's an asset. ඔයාලා නිකන් කියද්දි mal කරදරයක් වගේ නම් it's a liability. We'll say ඔයාට හැමදාම ඉස්කෝලේ අතු ගන්න තියෙනවා සවුන්දා. ඔයා සවුන්දා එතකොට කැමැත්තෙන් ඉස්කෝලේ යන්නේ නැහැ නේ. ගෙදර නවතින්නේ නැහැ අතු පන්ති අතු ගන්න තියෙන්නේ. Right? So that's a liability for you. So liability means there is an obligation to you to perform. Clear? There is an obligation to perform. So that is called as it has a liability. Right? So to perform the obligation, there will be a transfer of resources. There will be a transfer of resources. As an example, we'll say you have obtained a loan of rupees 10 million. You have obtained a loan of rupees 10 million. Clear? You have obtained a loan of rupees 10 million. So if you have obtained a loan of rupees 10 million, it's not like mal hatai for you. This is same as a liability for you. Because now you have granted a loan. Now you have granted a loan from Sampath Bank, we'll say. So Sampath Bank branch manager would be Kanchana. So you would have taken this loan from Kanchana to the bank. So every month you're supposed to pay, we'll say 80,000 for this loan. Every month you are committed to pay 80,000 for this loan. Every month you are committed to pay 80,000 for this loan. Clear? So therefore, if you are committed for an obligation, then it would be a what? Liability for you. So bank loan, you have a commitment now. You're supposed to pay this 10 million throughout whatever number of years. Clear? So that's so important. Then now you can see there is an obligation to repay. So loan you're supposed to repay, there is obligation. Once you are doing the repayment, there is the transfer of resources. What we are going to transfer in here? So cash would be transferred for the bank. So cash is the what? Economic resource. So liabilities examples, if you want, you can refer it in the tute, especially the students who are joining for the first time. So now liability, so keep it in mind that if you have any obligation to perform, obviously it's a liability. Obviously it's a liability. So it could be a transfer of resources. So what are the examples for liabilities? For the students who are listening for the very first time, one is loan. The other one is creditors. The other one is the creditors. Right? So keep it in mind, debtors, it's asset. Debtors, it's asset. But creditor, it's a liability. Then we would say some more liabilities. Make sure students who are listening for the very first time these definitions and the examples, make sure you write it down in your book or somewhere or refer it for the tutor. Loan creditors, then something called, we say accrued expenses. Accrued expenses. Later on, we will be discussing, once we are doing the bank reconciliation, bank overdraft. Bank overdraft as a liability. Bank overdraft as a liability. Right? So now, these are the examples for liabilities. Loan is there, creditors is there, accrued expenses is there. You might be wondering, so look here, what's the accrued expense? So simply, what it says from accrued expenses is the opposite of this is prepaid expenses. Opposite of this is prepaid expenses. Prepaid expenses is asset. Prepaid expenses is asset. But liability, it's a accrued expense. What's the difference between this accrued and prepaid? So students who are listening for the very first time, no need to get it panic. So we'll discuss separately the accounting equation that we'll be practicing these things. But before that, what it says from prepaid and accrued is, we'll say your electricity bill is rupees 100,000. Your electricity bill is rupees 100,000. Clear? Your electricity bill is rupees 100,000. Now, out of this electricity bill, you have paid just rupees 80,000. You have paid just rupees 80,000. So now you can see, out of the electricity bill 100,000. Out of the electricity bill 100,000, you have paid just rupees 80,000. So you have not paid. That means there is a payable. There is a payable. Electricity bill payable is how much? 20,000. Electricity bill payable is rupees 20,000. So this payable amount is called it as accrued expense. This is accrued expenses. So now you can see you have received the bill up to rupees 100,000, and out of that you have just paid how much? 80,000. So that 20,000 remaining balance is called as payable or the accrued expense. Right? So those are the examples for liabilities. Make sure students who are listening for the very first time take it down, or doesn't matter, it's there in your tutor also, you can refer to the tutor also. The third one is income. So now in accounting there are different accounting standards. Right? There are some asset related accounting standard. As an example, you have a LK16, property, plant and equipment. Then we'll say for your syllabus, you're having the LK2 inventory. It's a standard relevant for assets. Then there are liability related accounting standard also. Liability related. As an example, LK37 provisions, contingent liabilities, it's a liability related accounting standard. Then income. What are the examples? We'll say first, what are the examples for income? We'll say in your home, you have rented out we'll say you are having a building at Nugengoda Junction. So you might have rented out that building for someone else. We'll say you have rented out that building for Lanka Tiles. So you have given this for the renting purpose for Lanka Tiles. So now you receive every month 10 lakhs from Lanka Tiles since they use it. Right? So it is a what? Income for you is called as what? Rent income. It is called it as the rent income. Right? Then the next thing is, we'll say you have deposited 1 million in a fixed deposit in HNB bank. So you have deposited 1 million in HNB bank as a fixed deposit. You all know, for the fixed deposit, they will give you an interest. Now you are going to earn an interest income because you have deposited the cash in a fixed deposit. You have deposited the cash in a fixed deposit. So now you are earning an interest income. So This is what the other income is, the interest income. Then the most important income, as I am lecturing for advanced level, as I am lecturing for AAT and chartered, so my main income is not the rent income, not the interest income. My main income is that I am providing a service. So it's my service income. So it's my service income. Clear? Then, since I am providing a service, my main income is service income. We'll say some other company, we'll say pharmacy, we'll say Apico, the supermarket, we'll say Cargill, Skills, whatever. One-to-one, if there is the one-to-one sales, their main income is sales. Sales. Right? To recognize the income, basically there is an accounting standard which is called as SLFRS 15, contracts with revenue with customers. So this has been already tested for the last 2019 paper, right? Especially this has been tested in 2020 paper for first paper as well as second paper, company question. SLFRS 15 revenue adjustment was there. Right, quite this is interesting as well as new accounting standards. Right, so you can't do the company question sometimes with this because revenue, then the debtors amount, liability amount, everything is dependent on this standard now. Right, so that is so important. We'll discuss it later on. So the students who have purchased online accounting total get this SLFRS 15 course, doesn't matter. You can watch that also. So then these are the examples for income. Right. Then what are the examples for? Expenses? Then expenses, right? So now, if you look very carefully, income and expenses you have to take it very carefully because the thing is, if it is says the rent, if you are earning the rent, then it would be the rent income. If you are earning the rent, it would be the rent income. Doesn't matter. If you are earning the rent, it would be the rent income. Yes, exactly. But now we'll say you are earning the rent. But we'll say you are paying the rent. You are paying the rent. So if so, it is called as what? Rent expense. So it is called it as the rent expense. Clear? So if you are earning the rent, it would be the rent income, right? If you are earning the rent, it would be the rent income. If you are paying the rent, it would be the rent expense, right? It would be the rent expenses. Then what else? What are the other expenses? We'll say this is interest income. If you have deposited in a fixed deposit, you are earning the interest income. But if you have taken a loan, then it would be a what? Interest expense. So be careful in exam, right? Be careful in the exam because it would be sometimes the rent doesn't mean it like what it says from rent. Clear? It doesn't make any sense once it says rent, just the rent, because it would be sometimes the rent income, or it would be sometimes the rent expense. So in exam, be careful on that. Especially in accounting equation also. The issue will be there for you. Right? Students do a lot of mistakes, silly mistakes. දවසක් මගෙන් ඔය ඉස්කෝලේ ළමෙක් වැරදිලා ටිපෙක්ස් එක අරන් ගිහලා accounts paper එකේ ටිපෙක්ස් උත්තර. මිනිහා මගෙන් අහනවා දැන් මොකක් වෙයිද කියලා. කොහොමද ප්‍රතිඵල ගන්න? ගියේ පුතා මට මතක ඉන්නේ. Right? So be careful on these silly mistakes. Then what else we say? Insurance expenses, you know these expenses, right? Transport expenses, electricity expense, telephonic expense, right? So now, most important thing is, we're supposed to identify the relationship between all these 5 elements. So keep it in mind, these is assets, liabilities, income, then the expenses, the last part is equity. The last family member of this family is equity. Keep it in mind, no need to think too much on this equity. Make sure owner is always represent, right? Owner is always represent from this, the term which is called as equity. So owner is the equity. So will you say, here is someone. So someone is the owner, so he is called as equity. So always in accounting, owner's contribution, right? So owner's representative comes, right? Owner's representative comes always with the word which is called it as equity. Clear? No need to think it too much. You know assets. Assets are economic resources. Cash and cash equivalent, land and building, motor vehicles, furniture and fitting, debtors, cash and cash equivalent, prepaid expenses. Those are assets. අපි කියනකොට නිකන් ඔයාලට මල් 7යි වගේ හිතනවා නම් ඒවා තමයි ළමයි assets. Liability මල කරදරයක් වගේ නේ liability. මම කිය පන්ති අතු ගන්න තියෙනවා මල කරදරයක් වගේ. අම්මා කිව්වොත් එහෙම ගියක් කරන්න කියලා මල කරදරයක් වගේ. Yeah, that is a liability. Because there is an obligation to perform. Then it's an obligation to perform. So liabilities examples for now it's loan, creditors, accrued expenses, bank overdraft. Once we do the leases, SLFR 16 we identify the lease creditor also as a liability. So we supposed to do the SLFR 16 leases, for that it takes some time. So then income, you know, rent income, blah blah. Expenses, you all know what are the expenses, as well as now you all know what says from equity. What it says from equity. So equity means always owner's representative comes through the concept which is called as equity. So equity, it shows the owner's contribution. Clear? So that's how it comes. So now we'll see what is the relationship between these 5 elements. We'll see what is the relationship between these 5 elements, right? So now you all know there is an accounting equation. So today's lesson also regarding the accounting equation. So now we'll say basic accounting equation. Basic accounting equation, right? Basic accounting equation is, you know, there are 5 family members. Out of that, we take assets. Assets equals, right? Assets equals. Now we know assets means what? Your motor vehicles. Your motor vehicles. The business furniture and fittings. Cash and cash equivalent. Debtors. Those are the assets. Now the basic accounting equation, it says how you have financed these assets, how you have financed these motor vehicles, how you have financed this furniture and fittings, how you have financed the cash and cash equivalent for the business. Right? Just for a moment we'll eliminate the debtors. Then we'll say land and building. So these are assets. So equation, it says how you have financed these assets for the business. මොකද motor vehicle ජනවාරි දෙසැම්බර් 25 කියලා නත්තල් පප්පගෙන හම දීලා කරලා නැහැ නත්තල් කීයකට හම දීලා මේ වාහනේ ගියා ගන්න කියන බිස්නස් එක කියන්නේ. Right? එතකොට කවුරු පිටක් දීලා යන්නේ නැහැ. So business supposed to, if they are having motor vehicles, they have supposed to finance the motor vehicle. If it's 10 million, there should be a way how they acquired the motor vehicle. If the furniture and fittings is there for 5 million, there should be a way how they have financed the furniture and fittings. If the total assets is 50 million, there should be a way how we have financed this 50 million assets. Clear? So now this assets would be financed from the owner. Owner is called it as what? Equity. First the equation was like this. Assets were financed by the equity. That means if the business they have assets up to 50 million, guys. If they have assets up to 50 million, if they have assets up to 50 million, it says that 50 million has been, the assets have been financed through the owner, so through the owner's equity is 50 million. Clear? Then later on, not only the owners finance for the business, with the expansion of the supporting services, right? No worries that one is have they missed a lot. No, just few things. So I will make sure that recorded videos again they are for you, right? So now assets have been financed through the owner, so it's the equity. But later on, once your supporting services were liberating, next there was the banking services comes for the businesses as a supporting service. So as a result of that, what was happened? Businesses finance their asset through loan source. So then here comes the liability. We'll say you want 20 million cash. So assets 20 million you require the cash, but you can finance it through a loan. So that means assets have been financed from equity. That means equity means, keep it in mind, always it's who? Always it's the owner. Always it's the owner. Right? Equity means always it's the owner. Assets have been financed through the owner as well as from the liability. Clear? So that's the basic accounting equation. Give me a second. Right. So now you will be wondering, so look here, you said there are 5 family members. One is asset, the other one is equity, the other one is the liability. But you said there was another two, one is income, the second one was the expenses. One was the income, the other one was the expenses. Okay? So one was income, the other one was expenses. Then, for where that we can take this income and expenses? Keep it in mind. Then my question, I will have now we'll say, my question is income and profit are two different concepts or just a single concept. Income and profit. Income and profit are two different concepts, or it's a one single concept. That means income is equal for profit, or income is something different and profit is something different. What do you all say? Any answers? Just share your answers in chat box, please. So my question is, income and profit, are they the same concepts or are they different concepts? What do you all would say? Yes, exactly. It's a different concept, right? It's a different concept. Right. So now, profit means income minus expenses. It's a profit. Clear? Profit equals income minus expense. Now, why we start a business? Why we will start a business? Now, owner is representing in here as who? Equity is the owner. Always equity is the owner. Even once you go for the partnership accounts, equity would be the owners. Even you go for company accounts, equity would be the owner's contribution. Basically, the stated capital plus the what we call the reserves. So that's the equity in company. So we'll discuss later on once we come to the accounting ratios and all. So at the moment, just keep it in mind, equity is representing from the owner. Why we start a business? We say you are the owner for this business. Why you start a business? To generate the income. So if there is any income, you're supposed to add this for equity. If there is any income, you're supposed to add this for the equity. Clear? If there is any income, you're supposed to add this for the equity. Because owner required any income. If there is any income, owner wants to keep it for him. Clear? If there is any income, owner wants to keep it for him. Because why he is starting a business is to earn income. So if there is any income, first thing is, he's not going to share that income with the employees. He's not going to share that profit or the income with his friends. So first owner will be allocating that income for himself. So if there is any income, you have to add it for the equity. Then, if there is any expenses, you have to subtract from the equity. If there is any expenses, you have to subtract it from the equity. Clear? So that means this is how we arrange the 5 elements for the accounting equation. Clear? This is how you arrange the 5 elements for our accounting equation. So assets equals equity plus the liabilities. Assets equals equity plus the liabilities. Then if there is any income, you're supposed to add it for the equity. Then if there is any expenses, you're supposed to subtract from equity. So that's how we arrange the 5 elements. Clear? So that's how we are going to arrange the 5 elements. Right? So now, we'll take some examples and we'll do some bit of examples, then we'll go straight away for a past paper question. You might be wondering, so look, straight away how we can go for the past paper question. Doesn't matter, this is small lesson. I will show you how to go it from the beginning using some of the examples. Then make sure in accounting you follow this rule. Not a rule. Basically, it's a practice. It's not a practice. Basically, it's a health tip that I use for my last 6 years. Right? So in accounting, once they have given you a transaction, first identify if there is any impact for cash, first adjust that part. Yeah, I'm repeating it again. In a transaction, first you're supposed to identify whether there is any impact for cash from that particular transaction. Right? You have to identify whether there is any impact for cash from that transaction. Here, very first thing is that. Right? So first identify the impact for cash. Because we all know cash means a what? Asset or liability or equity or income or expenses. Some of the students I have seen that they say once I get cash, look here, it's an income. No, it's not an income. Income is interest income. Income is rent income. Income is what you earn, source of earn. The method of that you are earning the income. The method of you are earning the cash, it's the income. So cash is not an income, it's a what? It's an asset. Cash is asset. First identify what is the impact for cash. Right? So better you can take down this, but I'm not going to give you the time, so I will keep going with the lecture. Right? So you just take it down if you want. Right? Then we'll take some examples. We'll say there is a business. Asset is 0. Right? Asset is 0. Then liability is also 0. Equity also zero. That means just the business though it's there. It is still they have not yet started the business. So asset is zero, no assets, no cash, no furniture and fittings, no motor vehicles, nothing. Just the concept of business is here. Just the concept. This is the concept. This is the business concept. Since no one have invested, assets is zero. Liabilities is zero. At the same time, if you have any question, you can unmute yourself and ask, or you can either put in the chat box. Liabilities should be zero. Then equity also what? Zero because there is no business, just the business idea is there. So now we'll say there is Kanchana, my best friend. Right? Kanchana, she's here. So Kanchana's idea is to invest for this business. So Kanchana brings rupees 1 million for this business from home. So Kanchana now brings rupees 1 million for the business. Clear? Kanchana brings rupees 1 million for the business. Kanchana brings rupees 1 million for the business. How you bring rupees? Now Kanchana brings 1 million rupees for this business as the investment. Now, Lamai, look here very carefully. My health tip for you is always find it out if there is any impact for cash. First, identify whether there is any impact for cash. Now look here. Kanchana brings rupees 1 million for the business. Cash rupees 1 million for the business. Quite interesting. Then she brings the 1 rupees cash for the business. Cash means what? It's asset. Once she brings the cash for the business, in here the cash would be increased. Cash goes up. Okay. Once she brings the cash 1 million for the business. Clear? Once she brings the cash 1 million for the business. She brings the cash 1 million rupees for the business. Once she brings the cash 1 million rupees for the business, the cash will be increased. Cash amount available in this business would be increased. So cash increase means what? Cash is the what? See, look here. Cash is the asset. So if we bring cash, that means not only the cash increase, ultimately cash increase exactly equal to assets increase because cash is asset. So impact to this business concept would be assets would be increased by 500,000 because it's the cash. So my help tip for you is always identify what is the impact for cash. Clear? Always identify what's the impact for cash. Is it lagging for everyone? Alan, what is saying it's lagging? Is it lagging for everyone? Now okay, right? Others also okay right now? Is that so? No errors, right? Video is lagging one side. Is it so? Others? Can you reply please? Is the video lagging for you guys also? Right. If it's continue, let me know. I have a connection issue. If it's lagging, The further, let me know. So just inform for me if something is there. But just put a message. Right. So now cash would be increased by how much? 500,000. Clear? Cash would be increased by rupees 500,000. Right? So then, because the owner brings rupees 500,000 cash for the business. Owner brings rupees 500,000 cash for the business. So assets would be increased. Assets would be increased. Then, since owner brings this 500,000, now see, Kanchana brings this. Kanchana is the owner. I told you guys, any transaction related for the owner, it's always what? There is an impact for equity. Clear? If the transaction is relevant for the owner, there is an impact for equity. So equity means owner's investment. Equity means owner's investment. So cash would be increased by 500,000. Then since owner has invested for this, right? Since the right, just give me a second, they can't see the video. I will change my Wi-Fi connection and come back. Just be there. Hold on. Now is the voice is okay with? Voice is no issue, right? Right. Now you can see the screen also, right? You all can see the screen also, right? Okay, lucky. Shall I continue then? Any issues, please let me know. Right. You know, technical barriers, right? So, what I was discussing with you all is, now, once he was investing for this business, what is the impact for this equation is, cash increased by 500,000. So, cash is the asset. So, cash increased by 500,000. Then equity increased by 500,000 as the investment, right? Then liability is 3. Clear? So that's how it comes. Then the next one, this is owner's investment. We'll say you have obtained a loan of rupees 500,000. You have obtained a loan of rupees 500,000. Right? You have obtained a loan of rupees 500,000. So if you have obtained a loan of rupees 500,000, right? If you have obtained a loan of rupees 500,000, what's the heritage that I have given for you? First thing is there is an impact for cash. First thing is you have to identify whether there is an impact for the cash. Yeah, very first thing is you have to identify here whether there is an impact for the cash. Clear? Then you have to identify whether there is an impact for cash. Once you obtain a loan, we'll say this is the HND there. You go for the bank without any single rupee in the pocket, without single cent in pocket, without any single rupee in your pocket, you go for the HND bank. Once you have obtained the loan, once you come out from the bank, you comes with how much? Rupees 500,000 cash back. Right? You comes with rupees 500,000 cash balance because they have granted you the loan. So what's the impact for cash? Once you come out from this HND bank, your cash would be what? Increased by 500. Very first thing is identify whether there is an impact for cash. Again, cash is increased by 500,000. Look here. Was it financed by the owner? Was this cash financed by the owner? No. You obtain a loan. We have already discussed few minutes back at the beginning of this session. Loan is a what? Loan is a liability. Clear? Loan is a liability. So no impact for equity. Liability is increased by 500,000, which is called it as loan. Clear? So that's how it comes. Cash increased by 500,000 for assets. Liability is increased by 500,000 for loan. That's how it comes. Right? Then first thing is identify the impact for cash. Then third one, we'll say, now you have the investment, now you have the loan, that means now you have total cash of 1 million. So now you have to run the business. How we are going to run the business now? So what you are supposed to do is, now we'll say, you are doing a grocery. So now you have to purchase the goods. Clear? Now you have to purchase the goods. Now how we are going to, now we'll say you are a grocery. Then here comes the elephant house ice cream lorry. It's not looks like a lorry. I'm not good in this, right? So now this is the elephant house lorry comes. Then you purchase some of the elephant house ice creams, rupees 100,000, up to rupees 100,000. Now, just think the impact. First thing is what? Identify the impact for cash. How we are going to identify the impact for cash is here. Now see, you are going to purchase rupees 100,000 worth of elephant house ice cream for the reselling purpose. Ice cream grocery for the reselling purpose you purchase. Right? So now what's the impact for cash? Once you purchase ice cream for rupees 100,000, cash would be increased, the business cash would be increased, or the business cash would be decreased. Once you purchase, its cash go out. So cash decreased by how much? 100,000. You all know cash is asset. So impact is for the asset column because cash is asset. So cash is decreased by 100,000. You give him rupees 100,000. You give him rupees 100,000. Once you have given that 100,000 for the Elephant House ice cream company, for this lorry, they will give you what? As a return, they will give you ice cream. Strawberry, vanilla, chocolate, double delight, so and so, so and so, they will give you the ice creams for you. Clear? Then, ice cream means what? We call this as our stock or the inventory. We have a separate lesson called stock and inventory. Right? So, ice cream, the stock or the inventory, we call it. We call it as stock or the inventory. So you might be wondering, so why don't we say ice cream? Why do we use something called stock and inventory? Because there is an accounting standard which is called as LKS2. So LKS2, it says if you purchase something for reselling purpose, if you purchase something for the reselling purpose, it is called as inventory for the stock. So now you give them the cash. But as a return, you get the rupees 100,000 worth of ice creams. That means you get the 100,000 worth of inventory. So stock, keep it in mind, stock also what? Asset. Stock also asset because you're supposed to sell this. Right? So 100,000 here increase the what we call stock or the inventory. So that is the impact for the equation. Clear? That is the impact for the equation. Impact for the equation. Right? Then fourth one. Now you have purchased this stock now. You have purchased this ice cream stock. We'll say now you're going to sell this set of ice cream stock. Now we are going to sell this set of ice cream stock. Now we'll say the stock of ice cream have been sold for rupees. We'll say let's see it here. Cost of 5,000 ice creams were sold for rupees 7,500. Right? So cost of 5,000 ice creams. Yeah, ice cream set එක පාරක් විතරනේ බෑන බත් කනවා වගේ ice cream කන්නේ නැහැ කවුරුත් නේ. So out of this ice cream stock that you have purchased, 5,000 cost of the stock. That means 5,000 worth of stock. 5,000 purchase price of stock. If you have purchased this for 100,000, are you going to sell this same as for 100,000? No, right? Then no point of doing a business. So you keep a margin and you sell this for 7,500 rupees. That means cost of rupees 5,000 stocks. Cost of rupees 5,000 stocks was sold for 7,500 rupees. Now 5,000 cost of ice creams, you are going to sell it for 7,500 rupees. Now my point is, my hint for you is first identify if there is an impact for cash. You sell, now the customer comes, we'll say customer name is Sundari. Once the Sundari comes, you say, Sundari, look here is the ice cream, 5,000 worth of ice creams, I can give it for you. Give me rupees 7,500 rupees. So now you're supposed to collect how much from Sundari? Now you're supposed to collect 7,500 from Sundari. So now you get how much of cash? Some students I have seen, they say, look here sir, we received 2,500 cash. No. Are you going to collect just 2,500 from Sundari? No, even she's that much of beautiful, you don't just ask for 2,500 because selling price is 7,500. So you will be asking and you will be collecting 7,500 rupees, right? Then you will be collecting 7,500 rupees from Sundari. So impact for cash is what? Cash would be increased by 7,500. Cash would be increased by 7,500. Clear? But once you collect the cash from Sundari, can you ask Sundari to go out from the business? Can you ask Sundari to go home? Now you have already collected 7,500 rupees. No. You're supposed to give her what she requested. She wanted 5,000 worth of ice creams. So now this 5,000 stock, you're supposed to give this stock for whom? You're supposed to give this stock for Sundari. So your stock would be decreased by how much? 5,000. Stock would be decreased by 5,000. Now look here, be careful here. See, cash increased by 7,500 because you have collected 7,500 from Sundar. Then you have given her the stock worth of rupees 5,000. You have given her the stock worth of rupees 5,000. You have given the stock worth of rupees 5,000 to her. Then now look here, there is a profit for you. Is it clear? Now there is a profit for you. Now how much is the profit in here? 5,000 stock was sold for 7,500. Then your profit is 2,500. If there is any profit, who requires this profit? Who wants to take this profit is the equity owners. Equity holders, basically owners, will be taking this profit. That's what we have discussed. Because why someone is starting a business is earn profit. Why someone is starting a business, it's to earn profit. So because of the profit, your equity should be goes up. Here your equity should be goes up. Because profit is required for the owners. So owners' contribution will be increased over the other side. While the owners investing for the business is earn a profit. So if there is any profit, you're supposed to take that profit for equity holders. That means owners. Clear? So that's how you adjust this transaction. Right? We'll take another transaction. We'll say you paid the electricity bill of the business rupees 10,000. Paid the electricity bill of rupees 10,000. My humble request for you guys is first identify if there is any impact for cash. The first thing is you are supposed to identify if there is any impact for the cash from this transaction. Now from this transaction, see, pay electricity bill rupees 10,000. If there is any impact for the cash, if there is any impact for the cash, of course, yes, pay the electricity bill. So cash would be decreased by how much? 10,000. Cash would be decreased by 10,000. So cash means asset, right? So asset decreased by 10,000 because it's cash. See, electricity, it's a what? Expense. So guys, please make sure for the equity, we add income and the profit. If there is any profit or income, we add it for the equity. But now it's the opposite. Opposite of income is the expenses. If the income is added back, expenses should be subtracted. Right? Then from equity, you're supposed to subtract how much? 10,000. Because it's an expense. See, if there is an income, you add back for the equity. But if there is an expense, you subtract from the equity. Clear? Because ultimate answer would be the profit. To adjust the profit, That's the logic behind here, because everyone knows income should be added and expenses should be subtracted from equity, right? So to adjust the profit, we add the income and minus the expense. Clear? Then again, these are expenses, right? We'll take another example. We'll say cost of rupees 10,000 goods were sold for rupees 15,000. Rupees 15,000. How it should be adjusted? How it's supposed to adjust it? Cost of 10,000 stock. Cost of 10,000 stock. You have sold for rupees 15,000. Now think the impact for cash first. No need to think anything else. Just concentrate on this transaction and see whether there is an impact for cash. Now you can see you sold for 15,000. You're supposed to collect 15,000 from the customer. So cash would be increased by 15,000. Cash would be increased by 15,000. Then stock decreased by 10,000 because what earlier and stock එක නොදී ඉන්න බෑනේ විකුණනවා. what පාන් වල කලින් පාන් රාත්‍ර මුදලාට තියාගන්න බෑනේ. So they're supposed to give you the stock. So business cash increase, but stock would be decreased. Then there would be a profit. Equity increased by 5,000. So it's a clear. So that's how it is, right? Then again we'll take another transaction. We'll say pay telephone bill 5,000. Pay telephone bill. What is the impact for the equation now? See the impact for cash. Paid the telephone bill. So cash decreased by 5,000. Cash decreased by 5,000. Then equity. Now see, telephone is an expense. See, expense, see, income add back for the equity. Expenses decrease from the equity 5,000. Clear? So that those are so important. Those are the simple examples. I know there are some 1 or 2 students who have moved for common stream from maths, so some there, so it doesn't matter. So now we'll take the equity separately, right? We'll take the equity separately. So equity, there are 2 occasions where equity gets increased. Where equity increase, and there are 2 occasions where equity gets decreased. Okay. Equity increased, right? Equity increased because of any income. Equity will be increased because of any income. Whereas because of profits, we say profit. We say income and profit because rent is income, profit something else. So if there is an income or the profit, you have to add back for it. Clear? Right? This is the first the occasion that the equity gets increased. Right? Then again, because of the investment made by the owner. Investment made by the owner. Equity increase. Equity increase because of the investment made by the owner. So be careful. A lot of the students I have seen, they believe owner can invest. They believe owner can invest, right? Investment made by the owner. Right? So they believe most of the times investment could be only the assets. They believe investment could be only the assets. It's incorrect. Investment could be not only the assets. Sorry, investment could be, they believe only the cash is the investment. No, any kind of asset could be the investment. If owner brings cash, it's an investment, of course. If owner brings his personal motor vehicles, of course, it's an investment. If the owner brings his personal furniture and buildings, of course, it's an investment. If owner brings his own computer for the business, then it's an investment. Right? So if there is any investment, any assets would be the investment. Any income or profit added for equity, investment made by the owner, because of that, equity would be increased. Then equity would be decreased. Opposite of the income is what? Because of the expense. Because of the expense. Then the other one, keep it in mind, if you are, this is the very first time that you are listening for the accounting, this will be a new word. Others, they don't, this is not a new word. So the second one is borrowing. If there was equity increase, could be only one or two. Clear? If there was equity increase, could be only one or two. That means equity would be increased because of income or profit or either investment made by loan. Equity would be decreased only because from the expenses or because from the drawings. Clear? So now, expenses and drawings. So drawings means this is investment made by the owner. If owner takes something for the personal use, any asset taken for personal use, and it is called as drawing. And it is called as drawing. Clear? So drawings means any asset taken for personal usage. We'll say owner took 50,000 rupees for his personal usage. 50,000 rupees to, we'll say owner took 50,000 rupees to go for a trip. Now you might be wondering, so look here, doesn't matter, this is expenses, the trip, no. Business didn't go a trip, right? Business was there, employees were there. Owner went for a trip. So this is a personal trip. Owner can't use the business resources for his personal usage. Clear? If any business asset has been used for the personal usage, it's a draw. So how do I adjust this? Cash rupees 50,000 taken for personal usage. Think from the cash perspective. So cash would be decreased by 50,000. Cash would be decreased by 50,000. This is the drawings. Because of the drawings, equity would be decreased by 50,000. Equity would be decreased by 50,000. Saying what? Drawings. Clear? So cash would be decreased by 50,000. Cash would be decreased by 50,000, right? Because it's asset decrease. Cash would be decreased by 50,000. Then equity would be decreased by 50,000 the profit, right? Because if the owner invested, he brings the investment, he brings resources. It's plus. If the owner takes these things for his personal usage, if they take these assets for personal usage, it's drawing, so equity decrease. So I want to make sure that everyone who is in this classroom at the moment supposed to take down this. Equity increased by because of income or the profit, investment made by the owner, right? Then equity decrease because of expenses or the drawings. So I will give you like 1 minute, so you will have to take down this. Impact for equity, yeah? So here after we have to describe the transactions also. They have given you the transaction. If it is equity increase, could be only these two, one of these two. equity has been decreased could be happen only because of expenses of the firm. Huh? Have a try? Not right. You just take it down for this your book, please. I will give you 1 minute. And any questions, please share your questions. Huh? Just 1 minute I will give you. Take it out. Equity increase income from it. Investment made by the owner could be decreased because of expenses of the firm. Done? Right. So I guess everyone who is joining to the classroom should have the past paper book. Huh? And if you all want, the past paper book is that question is there in your tute also that I share. I will tell you what's the page number if you don't have the book, right? So student who have the past paper books, you're supposed to go for 2012 A level. Question number 3. 2012 A level, question number 3. That what I shared in your group also is there. The tute also is include 2012 paper. I will tell you where it is. It's there in the 25th page. They are in the 25th page. Question is the balance sheet of Bilani traders. Right? Student who don't have the past paper books, so it's a must. From your joining from the next week, you're supposed to have the past paper books. The balance sheet of Bilani traders, the sole proprietorship of 1st of January 2012 is given below. So not the balance sheet, it should be statement of financial position. Because now we don't use the balance sheet, statement of financial position. Right? Then can you all go for the required column and see, right? Now if someone cannot find it, it's in 25th page in that PDF. In that PDF, it's there in 25th page. 2012, question number 3. 2012 A level, question number 3. Let me know who doesn't have the past paper books. So if you all have the past paper book, I don't need to refer for this. You will have, is that so? Right. You're supposed to purchase, you have to buy it, yeah? Then you have the tube, right? In the group I have shared it. If you want, I can share it again for the group. Right? In that PDF, you're supposed to go for page number 25. That means PDF 25. PDF page number 25. No, I think the page number can make just the PDF number. That's once you're scrolling it, there will be. Right? යට ගහලා තියෙන නම්බරේ තමයි page number 4 කියන එක. අර part 2 එකට එන්න ඕනේ. පල්ලෙහාට යනකොට තියෙනවා part 2. There is something called part 2. In that PDF there is something accounting equation part 2, past paper and model paper discussion. And there is a question under the page number 4, basically PDF page 25, but they are written it as page number 4, the balance of Milani trade, right? So now we'll do this question. Right, so we'll do this question. Now go for the required. If you can't find it, the question also from the book, the PDF file, just let me know. Right. So now, what it says is, right? What it says is, they ask you to take this transaction for this format. Right? So I will have the format. Please take down this for your book. They are the format. How many types of assets are there? 4 types of assets. Then liabilities and right. So this is the format. Assets. What are the assets? Furniture and fittings. Inventory. Debtors. Cash. Here are the creditors. Liability. And this is it. Yeah. So that's how it comes. Right. So now, here, what is so important is, in this kind of accounting equation, at any type of accounting equation, first you have to be careful how much was the beginning furniture and fittings. Right? How much was the inventory that they had at the beginning of the year? How much of debtors that they had beginning of the year? Right? How much of cash that they had at the beginning of the year? How much of credit and liability they had at the beginning of the year? And how much of equity they had? So make sure somewhere put a star mark and write it down. Put a big star mark and write it down. This is so important because in some of the exams I have seen that in past paper, once you get the markings and the basically the examiner's comments, the famous mistakes that they have done the students because they haven't considered the opening balance. So put a star mark and write it down. Always, always, always extract, always extract opening balances, always extract the opening balances for accounting equation. Always extract the opening balances for accounting equation. Right? Always extract the opening balances for accounting equation. Open now, some might be that since there were some of the students who are joining for the very first time for this accounting class as well as who have been moved for the accounting field, right? So now, what I'm telling you is, first you have to see it as an example. 1st of January, how much was of furniture and fittings were there? 1st of January, how much of inventory was there? Those are the opening date balances. That means once they opened the shop for the reporting period, for a 1 year period, how much they had as the opening balance. Now look here, be careful in this question also. At any time, at any given time, if you can extract the opening balances, please extract the opening balances for the accounting equation. Clear? Please extract it for the accounting equation. Right? That's so important. That's so important. Otherwise, because the reason I would say why I'm always asking you to take the opening balance. Because sometimes you have to arrive for the closing balance. From the closing balances, from the net asset, from the equity, you're supposed to calculate the profit also. So in that case, if the closing balances is incorrect, obviously your answers would be changed. Obviously your answers would be changed. Clear? So that's why I'm telling you, you will get incorrect closing balances if you didn't extract the opening balances. Right? So now you can see, so now we are in 2012, 2012 A level, question number 3. Right? So everyone's supposed to keep a past paper book once you are joining this revision program, unless you, for the paper class doesn't matter. Paper class, separate set of questions I will be sharing, MCQs as well as the second paper question, that separate set of questions. But for this, I'll more concerned on what they have tested, right? So now look here, they say balance sheet. Now it's not there the balance sheet, just change it. Statement of financial position. Balance sheet title SOFP, statement of financial position, right? The statement of financial position of Bilani Traders and sole proprietorship asset 1st of January 2012 is given below. Now see, 1st of January 2012. That means these are the balances on 1st of January 2012. These are the balances on 1st of January 2012. Furniture and fittings, how much? 120,000. 120,000. We'll do this for thousands. Rupees 1,000. That means even we supposed to put 120,000 like this. We don't put it like this because it's nominating there. There are the triple zeros there for each amount. Right? 120. Inventory, how much was it? 70. Debtors, 10. Cash would be 30. Then creditors, liability, creditors is 50. Equity 108. I think everyone who is joining for the class, this class, aware that you all can use the calculator, right? You all can use the calculator. Even you can use the 100 FX, because I checked it with Samanthi madam also last time. Also, the students wanted to know it, so it was very clear that 100 FX is doesn't matter. You can use it. So this is 82 FX, right? But you can use 82 FX also, doesn't matter. But 100 FX also doesn't matter, right? But calculator number should not be more than 100 FX. Like 120 FX, you can't use it. Then it's a problem, right? So these are the opening balances. That means for the 1st of January 2012, furniture and fittings you had 120. Inventory you had 70. Debtors you had 10. Cash you had 30. Liability you had 50. The creditors, the equity is 180. Clear? So now we'll move for the transactions. First one. What's the first one they say? See now the transactions. I think everyone now having the past paper book or at least referring for my the PDF tutor. If you have any questions that if you can't find it, where the question is, so make sure you just ask from me. Yeah? So now, first transaction, very first transaction, what it says. Sold goods for cash 40,000. Cost of these goods was 30,000. What it says? Cost of 30,000 goods were sold for 40,000. Cost of 30,000 goods were sold for 40,000. Clear? Cost of 30,000 goods were sold for 40,000. Now, how to adjust this in accounting equation? First thing, the impact for cash. That's the very first thing that I asked you to do. See, 30,000 cost of the stock have been sold for 40,000. Cost of 30,000 stocks were sold for 40,000. Right? Cost of 30,000 stocks were sold for 40,000. Now you get cash amount up to 40,000. So here, your cash would be increased by 40 because you collect 40,000 rupees. Then stock 30,000. Stock is 30,000. Then stock decreased by inventory decreased by how much? 30,000. I want to put 30,000 because it's on 1,000, so subtract that. Clear? Now you can see cost of 30,000 stocks were sold for 40,000. Obviously, you have purchased the stock for 30,000. You have purchased the stock for 30,000. But you have sold it for 40,000. You have sold it for 40,000. So 30,000 stock sold for 40,000. There will be a profit of 15,000. Profit you all know where to edit the profit. Where to add the profit. Why we start a business is what? To earn a profit. So equity would be increased by how much? 10. This is the profit. Because equity means it's the owner, guys. Here is who is the owner? Dilani. Here is the Dilani. Dilani means the owner. Right? Dilani is the owner. So owner wants this profit. So if there is any profit, you have to add back for the right? So that's the first one. Then see, what's the second one? What's the second one? Second transaction. Purchase goods worth on 35,000 on credit. Since there are some of these ones who are more for the common subject for the very first time, I would introduce you the creditors and debtors. So this is the time to introduce you the debtors and creditors. The others who is well aware about the creditors and debtors doesn't matter. You can keep going this transaction. Others just listen for me. So if it is cash basis, doesn't matter. Transaction comes for the impact for the cash. Impact it will be there for the cash. But the question is, if the transaction is on which basis? If the transaction is on the credit basis. Credit basis could be, if you are listening for the very first time about the creditors and debtors, and if you are confused with who are the creditors and debtors, make sure you take this note. If there is a credit basis, purchasers. If there is a credit basis purchasers, then there would be one. Creditors and creditors is called as a liability. If there is any credit basis sales, then if debtors you get debtors is the difference. So once you are doing it, automatically you will get it for your mindset. So it doesn't matter until that credit basis, if it is purchased. That means you purchase some goods on credit basis. If they are on credit basis purchases, then it's a what? Like, if there is any credit basis purchases, then it's a liability. There is any credit basis purchases, it's a liability. If there is any credit basis sales, you get an asset called debtors. So if it is cash basis, always not the creditors, cash. If it is cash based, cash. But if it is credit basis purchases, you will get not the impact for cash, the impact will be there for credit. If it is credit basis sales, it's debtors, and creditors is the liability, debtors is there. Clear? Now take down this. If you are confused with debtors and creditors, and if you are very first time listening to this, right? Then the next question, the second one, purchase goods of 35,000. Purchase 35,000 worth of goods on credit. Right? So what is this? Purchase 35,000 goods on credit basis. You have purchased 35,000 goods on worth of goods on credit basis. Now see, whether it's cash based, whether you pay credit basis means you don't pay the cash, right? Even you purchase on credit basis, even you purchase from cash basis, doesn't matter. You will get this stock, purchase stock on credit basis. Whether it's on cash basis or whether it's on credit basis, doesn't matter. Whether it's on cash basis, right? Whether it's on credit basis, doesn't matter. Whether it's on cash basis or whether it's on credit basis, doesn't matter. You get the stock. Right? So whether it's cash basis or credit basis, you will entitle for the stock. So inventory increased by 35. Inventory increased by 35. Then see, this is credit basis purchases. See, credit basis purchases, you get a liability. Because you are committed to pay this on another 1 month or 1 week. So creditors increased by 35%. Clear? If it is credit basis purchases, increase the creditors. So stock increased by 35,000. But no, doesn't matter whether it's cash basis or credit basis. Once you purchase it through the cash basis or either the credit basis, you will entitle for the stock. So inventory would be increased by 35. Then the creditors liabilities would be increased by 35,000 because it's on credit basis, right? So then see the next one there. Third one. Right? Return to supplier 5,000 worth of goods purchased on 8th January 2012. That means this, now you purchase some goods here in the second transaction. You purchase some goods in here in the second transaction. Clear? You purchase some goods. You purchase some goods in the second transaction. Out of these goods, you are going to return 5,000 worth of goods. Yes. You might have asked for sunlight. They would have sent you wonderlight. You asked to send them the sunlight. They send 5,000 worth of wonderlight. It's not matched with your requirement because your requirement is the sunlight. But they asked you, but they have sent you the wonderlight. So you return the wonderlight now. Because you requested sunlight, they send you the wonderlight, unfortunately. So now you send 5,000 stock available in your stock purchase in your inventory decreased by 5,000. Inventory decreased by 5,000. Then creditor's liability would be decreased by 5,000. Because why? Earlier you purchased 35,000 goods. You are committed to pay 35,000 now for the creditor because you purchased it on credit basis. So you are committed to pay 35,000. Right? But now you are not committed to pay 35,000 because the reason is you have already returned some of the goods. Because you have already returned some of the goods. Inventory have been returned rupees 5,000. So if you have returned the goods, are you going to pay the 35,000? No. Then from that commitment also should decrease 5,000 commitment. Because now you are not going to pay 35,000, subtract 5,000. Clear? Fourth one. Sold goods on credit for 50,000. The cost of these goods were 40,000. Now see. 40,000 cost of the goods were sold for 50,000. 40,000 cost of the goods were 40,000 cost of the goods were sold for 50,000 on which basis? Credit. So again I am repeating, we are doing 2012 A level question number 3. Yeah? Now look here. 40,000 cost of the goods were sold for 50,000. Clear? 40,000 cost of the goods were sold for 50,000. But on credit basis. Can you remember if it is credit basis? Sales. Not the cash you increase, you get a new asset which is called as debt. Right? Now look here. Stock 40,000. That means 40,000 stock, you are going to sell it for 50,000 on credit basis. Then stock is decreased by 40,000. Stock is decreased by 40,000. This stock is decreased by 40,000. Then you sold for 50,000. Stock is decreased by 40,000. You have sold this for 50,000. You have sold this for 50,000. Then you collect 50,000, not cash, because it's on credit basis, not on cash basis. If it was cash basis, cash would be increased by 50,000. But now it's incorrect if you increase the cash. Because the reason is this is on credit basis. Yeah, this is on credit basis. So if it's on credit basis, not the cash supposed to increase. You're supposed to increase your what? Debtors. Debtors increased by 50,000. Yeah, debtors increased by 50,000. Then equity would be increased by how much? 10,000. Because how come equity increased? 40,000 cost of goods were sold for 50,000, the profit is 10,000. Because 40,000 goods were sold for 50,000, then the profit is 10,000. You might be wondering, so look here, it was on credit basis. Now, how do you get the profit? Doesn't matter whether it's cash basis or credit basis. If it is sold, it pays. Again, I am repeating. Doesn't matter whether it's cash basis or either the credit basis. If it is sold, obviously it is sales. That means you have sold it up. So 40,000 goods were sold for 50,000, then there is a 10,000 profit. Right? So again the profit would be added back to you. Clear? So keep it in mind, credit basis sales data. මේ කොහෙන් ලියා ගන්නද? දැන් අලුතෙන් ආපු කට්ටිය දැන් මේ වෙලාවේ මට දෙන්නේ විතර ජොයින් වුණා, පැටලෙනවා නම් මේවා ලියා ගන්න. If it is credit basis sales, then it's data, credit basis purchases, it's creditor section. Clear? Next one, fifth one. Received 9,000 cash from debtors and rupees 1,000 was written off as bad debts. So just remove the word bad debts, please. Not the bad debts. Right, good. Right? Now don't use the word bad debts. Just remove the bad debts and make it impairment loss. Now we don't say it's bad debts. Standard for change. You don't have that standard, one of the complex standard ever in globally. It's IFRS 9 financial instrument. That standard was changed. Then in Sri Lanka also it was changed. Now we don't hold it as bad debts. You might be wondering, so look here, you were saying changes. Will they test the changes? Obviously yes. Because last time even the assets liability new definition they tested. Not the old definition like in generating economic resources. Those are old definitions. Who cares those? People who write up the answers for those incorrect. Is the marking going? It's a new definition. Revenue recognition, new definition. Leases, new leases from the 2019. So you can't use the past paper lease questions also in company accounts. We have to change this based on SLFRS 60. Don't do the leases. If you have purchased the online account total case, then some of the students, I think that 2 or 3 years that they have gone through with the company accounts is there. So I have already discussed that there doesn't matter. Right? So in yours I will be discussing the same, but make sure once if you are following some the other ways, make sure that lease adjustment should be changed based on new SLFRS income. Right, okay. Now next one is what? Received 9,000 cash from debtors and 1,000 was written off as bad debts. That means impairment loss. Now see, first thing is identify the impact for cash. Received rupees 9,000 cash. What it says? Received rupees 9,000 cash from debtors. You see the impact for cash. Cash would be increased by how much? 9,000. Cash is increased by 9. That's why I told you, always think what's the impact for cash first. Then you all can go for the rest. Right? First identify what's the impact for cash. Right? So now the impact for cash is what? Cash has been increased by rupees 9,000. Now impairment loss. You will be wondering, so look here, what's impairment loss? Same as the bad debts, but we don't say it's bad debts, it's impairment loss. That means from a debtor, that means from this debtor you can't collect 1,000 rupees. Clear? From this debtor now you can't collect 1,000 rupees. So that's what it's called as impairment loss. Clear? If you can't collect, because now see there was a debtor. See, this is credit basis sales. You solve this for credit basis. That means debtor is supposed to give you 50,000. Debtor is supposed to give you 50,000 rupees. If you can't collect that 50,000, it is called as impairment loss. So here from this debtor, they have collected 9,000, but they can't collect 1,000 rupees. This is called as, if they can't collect it, this is called as impairment loss. This is called it as impairment loss. Clear? Loss, see, impairment loss. Then this is the expense, obvious. This is the expense, obvious. Then expenses you all know, equity decreased by how much? 1,000, saying I loss. I loss means impairment, not you loss. Right? Impairment loss is an expense. So equity should be decreased by 1,000. Right? Equity should be decreased by 1,000. Then now look here. How much is the total settlement of debtors? Now how much of debtors it has been fully settled? 9,000 cash you have received from debtors. 9,000 cash you have received from debtors. You can't collect 1,000. That means already that 1,000 also we have to forget about this 1,000 also, because you can't collect this 1,000. Now think how much of debtors it has been settled. You can't ask for this 9,000 because already settled. You can't ask for this 1,000 also again because it is already bad debts. It's already impairment loss. So now the total debtor settlement would be 9,000 cash settlement. 1,000 you can't recover. So total debtors we have to forget about up to rupees 10,000. So I made a mistake. This should be 40. Yeah? Guys, look here. I have to eliminate this 3 zeros. We are doing from 1,000, so I made a mistake. 35, 5, 10, 9, 1. Another, because I was doing this 1,000, so 10, this is plus 9, it is minus. Clear? Right. Right. Try for the sixth one then. And any questions, let me know. If something is not clear, you can ask. How it comes minus 10 is debtors balance. Debtors give you cash 9,000. You can't recover 1,000 from debtors. Then altogether debtors settlement is 10. Because anyway debtors supposed to give you the cash. So already give you the cash 9,000. But you can't recover 1,000. So total debtors settlement should be 10. Cash and impairment loss both settlement of debtors. So it's 10. Clear? Right. The next one. What is the next one? It says paid rupees 12,000 as salaries of employees. Paid rupees 12,000. So take it from cash perspective. Cash decreased by 12. Equity decreased by cash decreased by 12. Equity decreased by 12. Right? Six. Fine, right? This is the other one. Seventh one. Right? Paid cash to settle the creditors balance at 1st of January 2012. Underline it, the date. 1st of January 2012. 1st of January 2012. 1st of January 2012. 1st of January 2012. Paid cash to settle the creditors balance as at 1st of January 2012. Now look here. 1st of January 2012 balances are here. Settle the creditors balance as at 1st of January 2012. This is the date. This is the balance. This is the date. This is the balance. If this is the date. This is the balance. That means you're supposed to pay for the creditors liability. There is an obligation to pay rupees 50,000. Clear? There is an obligation to pay rupees 50,000 now. Now, if you're supposed to pay rupees 50,000, what they say? And 5,000 was received as a cash discount. Now we are going to settle these 50,000 liabilities, not these liabilities. Because they are emphasizing a special date. Balance asset for this date. That means balance you had for this date. 1st of January 22. Balance you had for this date. 1st of January 22. Right? So 1st of January 2012, the balance is 50. Clear? The balance is 50. Now they are going to pay for this creditors balance of 50,000. Now they are going to pay this creditors balance of rupees 50,000. They are going to pay for this creditors balance of rupees 50,000. They say once they are going to pay for this 50,000 balance, they have received a discount of 5,000. Clear? So that means you have you say you are going to pay for this 50,000 creditors. So now credit says, look here, we know that you have struggles with this COVID-19 situation. So no need to pay 50,000. We'll give you a discount. Now see, now from your side, you are going to pay for this 50,000 and you are receiving a discount. That means out of 50,000, they say 5,000 discount. It says 5,000 no need to collect. Right? That means out of this 50,000, they say no need to pay 5,000 rupees. Clear? Out of this 50,000, no need to pay 5,000 rupees to here. So now, for this creditors balance, you're supposed to pay 50. But there is a discount received. 5. Then how much you are going to pay? You are going to pay just 45. The cash. Clear? Now take the impact for cash. Cash would be decreased by how much? 45. Cash would be decreased by 45. Now look here, we have adjusted for this cash. Now we have to adjust 3 amounts. See, from this transaction, there is an impact for 3 amounts. One is 45 the cash, the other one is discount received 5 and is 50. Now discount received, it's a what for us? Keep it in mind, discount received is an income for us. Because we are supposed to pay 50. They say no need to pay the 50, they say no need to pay 5,000. Out of this 50, they ask us not to pay 5,000. So how nice people they? They say not to pay 5,000. If they say not to pay 5,000, it's the income. So it will increase by 5. It will increase by 5. This is also adjusted because it's an income. You know, income should be added back for the equity. Any income should be added back for the equity. Then total creditors settlement is how much? 50. Then creditors decrease by 50. Now if you are thinking how the 50 comes, you paid 45. You paid 45. Then they say not to pay 5. You have paid 45. Fine. They say not to pay 5. That means discount received. The total amount is how much? The creditor settlement would be 50. Total creditor settlement would be 50. Is it clear? So that's how it comes. I think now it's very clear. Right? So that's how it comes. Any questions regarding to that? Is everything clear? Huh? Okay, others? Almas Begum, Hamosh Malinga, Hasundi, Shahrukh Subha, not Shahrukh Khan, right? Good, we'll move on. Huh? So now 8-1, owner withdraw 5,000 in cash. Right? Owner withdraw 5,000 in cash for personal use. Owner withdraw 5,000 rupees cash for personal use. Now see how we are going to take this. Now see personal use. If you use this for personal use, can you remember the technical word that we use? If you use it for the personal usage, it is called it as drawing. Someone is used for the personal usage. If you are using the business investments, business assets for personal use, it's drawing. impact for cash. The owner withdrew rupees 5,000 cash. That means he has been taken out 5,000 cash for his personal use. Impact for cash is 5. Cash decrease 5. Then it's a drawings. It is called as drawings. So equity should be decreased by 5. Equity should be decreased by 5. Yes? Equity should be decreased by 5. Cash decreased by 5. Then equity should be decreased by 5. Clear? Because cash is, they have taken it for personal usage, the cash. So cash should be decreased by 5. Then equity should be decreased by 5. So that's how it comes. Clear? The next one. Received in cash the amount written off as bad debt. Shall I erase this part now? Right? So since I don't have the space, I will erase this. Right. Now what it says, again that term should be changed, not bad debt, it should be impairment loss. Right? What it says? Received the cash amount written off as impairment loss. Now look here. There was the impairment loss. Look here, as longer level, there was the impairment loss. You had the impairment loss here. That means you thought you can recover this 1,000 rupees. Right? Now you have recovered this 1,000. This from this debtor, earlier you had recovered 9,000 rupees. Earlier you had recovered 9,000 rupees. But you had not recovered 1,000 rupees earlier. Clear? So now you have recovered this 1,000 also. Earlier you thought that you can't recover it. So it was impairment loss, bad debt. Even I don't like to use the bad debt stuff since we are using impairment loss now. So it was impairment loss. We thought it was impaired, the data is impaired. Then this data comes after 1 month. Surprisingly, this data comes and gives you back this 1,000. You were surprised because you had not any call from this data. You can remember at that time once you were calling for this data. First time once he was calling for you, his phone was ringing, he was not answering for the call. Then after 2 months you call for him, then it says the phone is not responding. After another 1 month you call for this data, then it says that number is temporarily unavailable. Then after another 2 months you call for this data to check whether you can recover this 1,000. Then it was said that the number that you are dialing is not in use. Then after 3 months you went and visited his place, he was not there. So it's probably there. You can't recover. You can't recover it at entire lifetime. Surprisingly, April 1st on your birthday, then the data comes and give you this 1,000 rupees. So now think the impact for cash. Now you collect this 1,000 rupees, cash increased by 1. Cash increased by 1. Then equity, see now this is not impairment loss. You can't keep this impairment loss. We have to reverse the impairment loss by 1, then this is 1. Impairment loss. Here. This is the impairment loss. Reverse it. Right? This was the impairment loss expense, but this is not more expense because you received the cash. Okay? So the 10th one. මේ වගේ ගණන් ටිකක් කරාම ඔය ඉබේම හරියනවා. හැබැයි අපි කරනවා අනිවාර්යෙන් 19 ගණන් දෙක මොකද because it was bit of change. Right? So same way it would be tested for you also. Right? The next one is what? Provided depreciation 3,000 furniture and fittings for the month of January. So depreciation, furniture value should be decreased by 3. Then depreciation is an expense, so equity should be decreased by 3. Keep in mind, depreciation is an expense. This is a separate lesson called it as LK16. So once you are joining for that class, you can watch that one. Right? Furniture and fittings. You have to subtract 3 because of the depreciation. Then the equity is decreased by 3. Clear? Decreased by 3. Furniture and fittings decrease 3, equity decreases. Right? Depreciation means the value decrease basically. Separate lesson we'll discuss that part once we are doing. Right. So that's all. What I want is go through with this equity column and please take the total of equity column. Please take the total of equity column first and let me know how much is the total of equity column. I'm not sure whether my equity column is okay because I have erased it now. So you have done that question. So make sure you take the correct closing balance for equity. That means I want the equity total to here. Others also you can fill it out, but I want just this equity. Okay. Aisha Sadiq. You can use the calculator and get it done. Nothing right. So now you have taken the answers. This is how much? The equity total is 185. This is the total for the equity column. Right? So this is the total for the equity column. It's how much? 180. Total of equity column is 180. Right? I will erase this. And see, there is another part. Right? So what it says is second part. Using net assets basis calculate the profit loss. Using the net assets basis, calculate the profit loss. Then using the net asset basis, first thing is what it says from net assets. First thing is what it says from net assets. So some students think that net asset, oh my god, asset is their total assets. Then the assets minus this thing, incorrect. Right? Net assets is a similar word that we use for equity. Net assets, it's a similar word that we use for equity. Then, how to calculate the profit using net asset basis? How to calculate the profit using net asset basis? Profit equals net assets means equity. That means from equity we are going to calculate the profit. How we can calculate it is if you figure it out the equity column, and you remember we said we add the profit. If there is any profit, since all I wanted is you add it for the profit. Clear? You add it for the profit. You add the profit for equity. That means profit is inside this equity closing balance of 185. 185. But not only profit, you have what? Minus drawing fee. You would have plus the additional capital, yes? Right? So therefore, then there is the opening capital, opening. Right? So now you can see in equity column there is the profit. In equity column there is the profit. But concern is in equity column, not only the profit, even there is drawings, there is additional capital. We have to get back only this profit. We have to get back only with this profit. So closing equity 185 comes as a result of opening equity, profit, drawing, and additional. As a result of all these four, only then you get the closing capital. But guys, keep it in mind, this 185, this 185. The impact of all these four elements, but out of these elements, we have to calculate just the profit figure. How to calculate? Profit equals closing equity. See, this one. Minus opening equity. Opening equity. Right? Opening equity. Then plus drawings. Because people subtracted the drawings. But to get the profit figure, which is in here, to get the profit, we have to eliminate the drawings. To eliminate the drawings, we add back the drawings. Plus drawings, right? Then minus AP, that means additional capital. Additional capital. This is so important even for the MCQs, you're supposed to use this knowledge. This is the formula that you use to calculate the profit using the net asset basis. This is the way that you calculate the profit using the net asset basis. Clear? That means from the equity, closing equity minus the opening equity, then you have to add the drawings, then you have to minus the additional capital. Right? Then, how much is the closing equity? Closing equity, you already calculated how much? 185. 185 is the closing equity. How much is your opening equity? See, 1st of January 2020, that column, equity column, opening balance is how much? 180. Then plus drawings, go with the question, there was one and only drawings. There was a drawings transaction. Go and check the Roman number 8. Drawings equals 5,000. Then additional capital was 0. There was no additional capital. So the answer is 185 minus 180, 5, 5, 5. Last one is 8. That's how it comes. Clear? Any questions you can ask from me. Doesn't matter. Good. Right. Seems like no questions, no problems, right? At which time class finishes? Like we started at 8:30 now. Sorry, 9:30 now. 12:30. Is it chef? So we'll take like 5 minutes break now. Huh? So now the time is 11:42. We'll meet at 11:50. You just have a small break and come back. Right? Then I will finish it at like 12:30. Yeah, I will do another question. Right? Question for the first question, I take some time because it's starting from small points, you know. So then after that we can, ask that we can go the question. So doesn't matter. So we'll take a 5 minutes break. Now time is 11:43. Exactly, I will start at 11:50. Yeah. Right. Right. We'll keep going with the session then. Next, you are supposed to come for 2017 A level or 2017. Can you all come for 2015 A level? 2015 A level. 15 A level, question number 3. 2015 A level, question number 3. Right? So, once you are joining for my classes, you should have the past paper. Huh? Unless the paper class supposed to. Right? So, in that tute also it was there. If you don't have the past paper books, and don't have the past paper books in that tute, they are the there should be the question. If there are question number 6, that in that PDF tute, that PDF material I have shared in the group, again I shared it. There is page 21. In page 21 it says accounting equation part 2, past paper and model paper discussion. Past paper and model paper discussion. There are question number 6. They are the question number 6. Others you all can refer for, right? Narad opened something, right? So 2015 A level, question number 3. Right? Okay. First, can you all have the table? Can you all have the table? Equation table. Right? How many assets are there? 1, 2, 3, 4. So here, right. Liabilities. And the equity. Let's divide it into 4, 2, here the assets, liabilities, equity. Right, assets, what it says? One is property, plant and equipment. Right, then inventory, trade debtors, bank, change it for cash, huh? Not bank, should be cash. Huh? Then Trade payables, loan. Right? We'll take balance brought forward. See if there is any opening balance. Just check whether there should be any opening. First have the table, please. Have the table. Then try for the opening balance BBS. Right? Saruk Subai or Shahrukh Khan or whatever. We are at 2015 A level question number 3. Yeah? Have the format. 2015 A level. Have the format and try for the opening balance. Extract the opening. Create the. You might be wondering where is the opening balance. This is the place that we have already student get misunderstood. So read the paragraph. Read the paragraph. Narada open a stationary shop. Read that part very well and take that information to equation as balance mode. Right? Right? I will give you 1 minute. Have this format and take the opening balances. That's what's so important because that's why I told you take the opening balances first. Students who didn't take the opening balances in this case, who didn't take only the transactions, didn't get the correct closing balance. So there were number of questions, number of cases that there students missed some of the marks because they didn't extract the opening balance. Okay, that's why that star mark is so important. Right. Is there any student that who who have done the 80 final stage, not the with me, like basically that for that free session that we did online accounting content, is there That student is in there. Ah, right, you. Okay. Right. The medium were not much of case for you, no? Right. Okay. So now we'll start this. See, Narada opened a stationery shop in part of his home on 1st March 2015. Underline the word on 1st March 2015. So that's so important, the date. That means we are going to start, he is going to commence the business on 1st March 2015. He is going to commence the business on 1st March 2015. Right? Then what they say? By investing 150,000. That means first day he is investing 150,000. So cash increased by 150. So we'll say this is rupees 1,000. Rupees 1,000. Right? So everything is in here rupees 1,000. Huh? Right? So it's 150. Right? He has invested 150,000 cash. He also brought 60,000 worth of furniture for use in the business. Now look here. He brings furniture also. He brings furniture also. So not only cash, he brings furniture. He brings when furniture comes under the property, plant and equipment. So this is plus how much? 60. The student who missed this 60 missed the depreciation also. Here, student who missed the 60, they miss the depreciation also. Here, they miss the depreciation also. So, not only the cash he brings, he is investing furniture, so it's property, plant and equipment. On this data, carried out all the cash transfers through a bank account. So, now how much is the total investment made by this? Narada. So, 60 furniture, 150 cash, so all together is 250. So it's so important what was happening at that time. Student who missed this opening balance of 60 of property, plant and equipment didn't depreciate this furniture and fittings. Clear? So that's so crucial. Then now we can one by one for the transactions. First one, now see, they are doing a stationery shop. Now what is their stock now? Their stock is what? Stock means, keep it in mind, if you purchase something for reselling purpose, if you are going to purchase something for the reselling purpose, then it is called as stock. If you purchase something for the reselling purpose, it is called as stock. Right? So now, this what they purchase for the stationery shop is stationery items. That means stationery items is the inventory to here. Now, first one what it says. Purchase stationery items 100,000 on cash. So, thinking from the cash perspective first, you purchase 100,000 stationery items. Cash decrease, inventory increase by 100. Cash decrease, inventory increase by 100. Yeah. Then second one. Second one is what? Sold stationery items, cost of 70,000 for 100,000 on cash. So you get cash 100,000. Cash increased by 100,000. Inventory decreased by 70. Now see, cost of 70,000 stock was sold for 100,000. So equity increased by 30. Right. Then the third one, if I'm bit past, let me know if you want any explanations. Then third one, purchase stationery items 150,000 on credit. Now look here. This purchase is not on cash basis, now it's on credit basis. This is on credit basis. Purchase stationery items for 150,000 on credit. Whether it's cash or credit, purchase inventory means inventory goes up. Then this is credit basis. That means trade payables for the creditors is increased by 150. I guess now we have already done that part. So where the credit basis transaction comes its impact for creditors and debtors. Right? Then this is the third one. Then the fourth one. Return 30,000 stationery items to suppliers due to defects. That means out of this due to the defects, right? So now, due to the defects outside in this inventory, 30,000 inventories were returned. So this is inventory decrease 30 because you send out the inventory, then you don't need to pay for creditors, so decrease 30. Decrease 30. Clear? So that's how we come. You might be wondering, so look here, cash doesn't impact. No, there is no impact for cash because we believe all the returns it's parallelly for the credit basis purchase. Yeah, but you have purchases on credit basis will be returning here. That's how it is. Right? Then fifth, purchase a computer. Purchase a computer on 15th March. Rupees 120,000 on credit. This amount payable over period of 18 months. Now you purchase a computer, how much? 120,000. Now computer also comes property plant and equipment. You might be asking, sir, look here, why it doesn't come for inventory? Because inventory is stationary items, reselling purpose. Computer purchase for the use of the business. So property plant and equipment would be increased by how much? 120. Property plant and equipment would be increased by 120. Clear? Then see, you have the wordings on credit, but don't put it for trade payables. Trade payables means if you have purchased the inventories on credit basis, then it's trade payables. Clear what I'm saying? If it is credit basis purchases of inventory level, right? If it is credit basis purchases of inventory, then comes for trade payables. Clear? Then only comes for trade payables. For all the other times, it's not the trade payable, it's a loan. See the wordings. They say they have given a time of 18 months period, 18 months installment. So trade creditors doesn't give it that chance. Trade creditors, they don't give that chances. What trade creditors they do is they say, look, you have to pay within 3 months, but like installment 18 months, it goes there. So it is a what? Loan. So loan increased by 100. Even it doesn't say the loan, it's because we can't take it for trade payables because trade payables trade payables comes for trade goods. So that's why we can't take it. Then sold inventories items with a cost of 100,000 for 140,000 on credit. So inventory minus 100, 140,000 on credit. Trade debtors increased by 140, increased by 140. Then equity increased by, yes, trade debtors. Because it says credit basis, they have sold it on credit basis. So it's increased by 100. The seventh one. Good. The seventh one is pay 15,000 the monthly salary of the office assistant. Right? Now we are dealing with this month of March. So cash decreased by how much? 15. Cash decreased by 15. Cash decreased by 15. Then salary is an expense, so equity decreased by 15. Cash decreased by 15 since it's an expense, equity decreased by 15. Right? The next one is obtain 30,000 from the business for the personal use of Narada. Now it comes the personal use. Now it's the personal use. How much he has taken for personal use? 30,000. Personal use 30,000. So cash decreased by 30,000 because he has taken cash for personal use. Then it's a drawings. So equity decreased by 30. So the equity should be decreased by 30. Right? This is 3. Then the ninth one is paid stationery supplies subject to 5% discount on the outstanding balance. Now this is so important. Now you are going to pay for the stationery supplies. First, you have to identify where the stationery suppliers balance is. Here, I told you if you have purchased inventory for the stock, it's trade payable. Then for the inventory part, for the loan you are supposed to pay 120. Not for loan you are getting the discount. You are going to get the discount. You are going to get the discount for trade payables. You are going to get the discount for the trade payables. Right? You are going to get the discount for trade payables. Right? For trade payables, balance is how much now? 120. Clear? Student who put, there was another case in the marking scheme that they have identified. It's a common error. Student who have put this 120 computer purchase also for trade payables got incorrect balance to here also. See how crucial is this? Because everyone is careful, everyone who is going to sit for the exam would select this accounting equation. Believe me, I did my A-levels in 2013, not that much of 19 times. Right? So since after the exam I was doing the classes. So up to now also I am doing from 81 to 80 final as well as chartered for different professional courses. So recently only I started this A-level classes since I was interested about that, or since I am doing from chartered A-levels, chartered English medium accounting as well as up to AATs. So it's a different story. So what I'm telling you is just reminding myself that how I feel once I'm going for the exam. So I did my A-levels in 2013. So if you refer the 2013 paper, 2012 was the new syllabus, the introduction was there in 2012. The paper was so easy, the accounting paper as well as all the 3 papers were so easy. So 3 years were there like 800 more than 1000 I did in Colombo, only in Colombo. So at that time in 2013 also, once I got my second paper, did you know what I checked? You went to think, okay, you check the compulsory question. No, I know compulsory question is combined question, nothing to check. I know compulsory question number 2 is partnership and overhead that time. And now your compulsory question 2 is different. That time, those 2 questions I knew it, so I didn't check it. But I checked the question number 3, whether the examiner has given the accounting equation. Because that's a question that we can select easily. Right? So we want to make sure even if it's a simple question, we can't do mistakes. We can't do mistakes. For a 1 mark, your rank would be goes it like for 100 times. Right? So because I was at that time in Colombo 56. So if I take like another 1 mark for accounting, I would be get like Colombo 50. So that's so crucial. For a 1 mark, how it can make it changes. So once I got the paper, I checked the question number 3 is there the accounting equation because I knew that it's the most simple question to be answered. Clear? Right. So now what I was telling for you is students have been taken this computer credit basis purchase for trade payables. The trade payables balance was insert. Now see how much is the balance now? 150 plus minus 30. So creditors balance is how much? 150. Creditors balance is 100. Then they say what? For creditors balance subject to 5% discount on outstanding balance. This is the creditors. 5% discount on outstanding balance. Then 5% means this is 6. Right? Then how much you are supposed to pay? 114 for credit. For creditors, you are supposed to pay 140. So cash decreased by 140. Cash decreased by 140. Then see, you received a discount. You had to pay 120. They said not to pay 6. This is a what? Discount receipt. This is a discount receipt. It's an income. I told you discount receipt is an income. So equity add back 60. But total, how much is the creditor settlement? How much was the total creditor settlement, guys? 140 you paid the cash. 6, they say not to pay 6 for them. It's a discount receipt. Then total settlement is 120. So trade payables subtract 100. Clear? Then trade payables should subtract 100. Right? Any questions? Let me know. Then try the 10th one, guys. Yourself just have a try for the 10th one. Tenth one, yourself first try. Let me know your answers for the last one, guys. I want it. Right. Ninth one, what it says is, read the question now first. Pays the stationery supplier subject to 5% discount. The stationery supplier, it's representing from where? From the trade. Stationery supplier, it's representing from trade finance. Now, forget about this. How much is the trade payables balance? It's not 150. There was a minus 30. Then trade payables balance is how much? 120. Trade payables balance is 120. Out of this 120 trade payables balance, there will be 5% discount. There will be 5% discount. Yes, there will be 5% discount. Then 120 into 5% means discount is 6. Then you're supposed to pay how much? You're supposed to pay cash only 140. Is it clear that part? Is it clear that part? You're supposed to pay just 140. It's clear, right? Now see. Then how much is the cash payment you make? Cash you pay for how much? 104. This 6 is discount received for you. This 6 is discount received for you because they say not to pay. They give you a discount. You are receiving a discount. This is discount received. This is discount received. Discount received is the income for you. Discount received is the income for you. Then equity plastics. Equity plastics, because discount received is income for you. Equity plastics. Then how much is the total creditor settlement? Cash paid 140, no need to pay 6. Altogether settles trade payables of how much? 100. Clear? How much is it clear? How much the total adjustment is it clear right now? Some I matter 10 तक एवं answers for that. 10 be the answers for 10th question. 10th question එක කරලා answer. Chat box එලානවා. Just send your answers for question number 10. Right. Now look here, what it says. Received, it's not Mutara, the trade payables, it should be trade receivables. Trade debtors, not trade payables. Look here, what they say. Received the amount due from the debtors after allowing a 5% discount. Now look here, what they say, again read it. Received the amount from debtors after allowing a discount of 5%. Received the amount from debtors after allowing a discount of 5%. Now see how much is the debtors value? 100. Then 5% discount, you give the 5% discount. It's how much? 7. 5% is 7. Take the calculator and do it. Then debtor is supposed to give you the cash only for how much? 100. Yes. It says you are going to collect the cash. It says you are going to collect the cash from debtors. Collect the cash from debtors after allowing a 5% discount. Then the cash you are generating is how much? 136. So here, cash. Here the cash. You are going to collect 133 from debtors. Then debtors increase, cash increased by how much? 130. Right, now look here. We recorded 133. You are going to receive 133. Then discount, this is not received, this is discount allowed. That means you gave a discount for debtors. Earlier, you received a discount from trade payables. Earlier, you received a discount from trade payables. Earlier, that's what was happened. Earlier, you received the discount from trade payables. They say no need to pay 6. But this time, you are giving a discount for debtors. So this is discount allowed. This is discount allowed. You allowing a discount for debtors, then this is a expense. This is expense. Discount allowed, it's 7. Right? Discount allowed, it's 7, it's an expense. So if it is subtract 7. Earlier this was discount received. They say no need to pay. Now you say no need to pay. If you say no need to pay, that's an expense for you because you had to collect 104. You say no need to pay 7. Then 7 discount allowed is an expense. So if it decrease by 7, total debtor settlements, cash plus discount allowed, debtors should be decreased by how much? 104. Clear? So that's how it comes. I think it's now very clear. Any questions? Please let me know. If you didn't understand, just let me know. Is it clear, the question? Yeah. Now, Kasunika, this is the thing. So it says, it doesn't say the interest now. That loan interest, they don't say. If the interest was there, we can take the interest amount. Then obviously you sub. I'm referring to the fifth one, Lamai. One is asking why we didn't consider the installment, 18 months. Because they didn't give us the interest. We don't care how many installments are there. The liability is what we focus on. We don't care we have to pay it from 2 months, we have to pay it from 25 months, whether it's from 18 months. If it is loan, it's a loan. Doesn't matter how many installments are there. This is additional wording that they have made to misinterpret the students. You just have to keep it in mind. Whatever number of years doesn't matter. Through installment, 18 months, 25, 50, whatever number of installments, it's a liability. It's a loan. That's all. Clear? That's how it comes. If there was the interest, you're supposed to calculate the interest for this amount instead of installments, because you don't pay the interest based on installment, you pay for the total loan. Is it solved? Is it clear, this question, others? How do you find the percentage? Charu, what's the percentage you mean? Loan percentage. There is not the loan percentage they have given for you, so you can't find it. They should give it. Is that so, Shahrukh, that you asked? This is right. Debtors 140. See, Shahrukh Khan, 5% discount. 5% is 7, right? 140 into 5%, 7. Because they say discount is 5%. Arne? 140 into 5%, 7. I put a calculator. Arne? Others, is the question is okay for you guys? Is it okay, the question, guys? Malinga, Kamosh, Lasanji? Krishanga? Others also okay, right? Lasanji and all? Krishanga? Right, okay. So any student here that they're starting accounting as a fresh subject, that means this is the first time, there should be 1 or 2. Anyone who is starting the accounting as the first day in your life? Anyone here? Oh. Others? Okay. So now, shall we go for the second part also, guys? Now look here, there are additional information. You might be wondering, so look here, do we need to consider the additional information also for this table? No need to consider the additional information for this table. No need to here, they say what? Using the accounting equation, show the impact of the above transaction from 1 to 10. That means not the additional information, you just supposed to take it from 1 to 10 transactions. Right? You're supposed to take only from 1 to 10 transactions. Right? 1 to 10 transactions. So, you don't need to consider the additional information. And Krishandan, after the class, you just send me a message. I will share you some more videos where they are from the beginning, so you can refer for those also. Right? Since others also belong these things that they are aware, so it doesn't matter. So I will share those videos with you, so you can get more idea, right? Because time to time there will be some connections with other lessons also. The basic, the other lessons, as an example, income statement format and all. But keep in mind, for the income statement, you have to refer the additional information. Huh? Right? For income statement, you're supposed to consider the additional information. Right? Now look here. They ask you to calculate the income statement, prepare the income statement. How it should come? No need to bifurcate the expenses like selling and distribution and all. Huh? Just say expenses. Just say expenses. Okay. So now we'll come one by one the transactions. Otherwise, what you are supposed to do is, once you are filling the accounting equation, you're supposed to take those amounts to here. Technically, it should be happen. But since I can't do it in the ones there is not this space, so first I did the accounting equation. If it is in a physical class, I would have done this also parallelly for accounting equation. As an example, once you fill in the accounting equation cash sales, I fill this one also. That means first you have the accounting equation format as well as the income statement format. Okay. Then first one, purchase stationery for 100,000 on cash. See, purchases here. First one you put to here, 100. Right. The next one, sold stationery items with a cost of 70,000 for rupees 100,000 on cash. So now sales. How much is the sales value? 100,000. No need to adjust the cost, huh? Because cost of sales we separately calculate it. We are going to calculate separately the cost of sales. Right? We are going to calculate the cost of sales separately. Clear? Once we calculate the cost of sales separately, that cost of 70,000 stop, no need to adjust. So just take the selling price. Sales 100. We have the format, huh? Krishandan. Then third one, purchase stationery items for 150,000 on credit. We said we don't care whether it's cash basis or credit basis, so add to here purchases 150. Add to here the purchases 150. The next one, return 30,000 stationery items to suppliers. Look here. Here you purchase, but they are returned, so subtract 30. Because there were purchases, but you return 30, so return should be subtracted. Right? Then, what's the next one? Purchase computer. You might be wondering, so look here, purchase computer should come to here. No, why? Here the purchases means what you have purchased for the reselling purpose. Here the purchases is what you have purchased for the pre-sales purpose. Stationery shop that you are doing. So stationery items purchases should come to here. Computer doesn't appear in here. Okay? Computer is you use for the business, not for reselling. So computer doesn't come for here. Computer is the property plant and equipment. Then again they say stationery items with a cost of 100,000 rupees were sold on credit, 140,000. We don't consider whether it's cash basis or credit basis. If it is sales, it should be sales. Okay? We don't care whether it's cash basis or credit basis. If it is sales, sales. Right? No need to adjust the cost. Cost of the goods, no need to adjust because separately we will be taking the cost of sales. Then say 15,000 monthly salary of office assistant. So here expenses salary. Since I am doing it 1,000, I will put 50. Right. Then obtain 30,000 from the personal use for Narendra. For Narendra. So this is drawings. No? Keep it in mind. Drawings doesn't come for income statement. Income statement comes only what? For income statement, it comes only income and the expense. Drawings is not an expense. Drawings is not an expense. Drawings is just a deduction of equity because drawings means personal usage. Personal usage you can't take it as business expense. Clear? Then pays the stationery supplier subject to a 5% discount on outstanding balance. Can you remember there was discount received 6? Just go and check that accounting equation also. For the transaction number 9, there was discount received 6. So other income, can you remember 120 to 5% I calculate? Discount received 6. So this is comes from transaction number 9. This is comes from transaction number 9. Check, we have done this in accounting equation. The next one is discount allowance. 10th one. Can you remember in the 10th transaction we calculate discount allowance is 7. Is it clear? Right. Now you prepare this income statement for the month of March. You prepare this income statement for the month of March. Look here the additional information. What they say? Telephone bill for the month of March, 15 amounting 3,000 was received on April 2nd. Look here. March telephone bill have been received in April. How much is it? 3,000. Look here very carefully. March telephone bill, how much is it? Rupees 3,000. March telephone bill is rupees 3,000. March telephone bill is rupees 3,000. Out of this March 3,000 telephone bill, there was the bill for March, but bill was received in April. Bill is relevant for March. Received the bill on April. My question is, telephone expense should be this 3,000 should be recognized for month of March or for April. You have to recognize this for month of March or the April. What you guess? Okay, one answer is there April. If you want, I can give you like help tips. I can give you like call a friend chance. You can call for your best friend, or you can call for your school lecturer and ask. I have already given you 50-50. Look here, only to March and April. So you have to consider you received April doesn't matter. In accounting, we don't care when we receive it. We don't care. We consider for which month this is relevant. For this month, this For which month this is relevant? This is relevant for month of March. This is relevant for the month of March. Then the telephone bill comes for the month of March. Is it clear? So in accounting, we don't care. Otherwise, this is a mismatch. Why? If you take this telephone bill for month of April, that means April income statement having March information. No. March income statement should have March information. See March. How much is it? March should have the March income should have income statement should have March information. So you can't take it for April. You have received April. That's a different scenario. We refer what is relevant. What is the relevant reporting period for March? So comes to here. Clear? So that's how it comes. Is it clear? Is it clear? Clear, Shahrukh? Shahrukh Khan. Others? Rukia, Ramesh. The next one is what? Now, depreciation. So important. The property, plant and equipment of the business should be depreciated on a straight line basis on 20%. Depreciation, another lesson. Just if you are not aware about the depreciation, doesn't matter. Just see the calculation and do some homework, then you can get it all. Depreciation. Now, what it says? Depreciation should be made on 20%. 20%, but this is 20% per annum. Clear? This is 20% per annum. Right? This is 20% per annum. That means for a 1 year depreciation is 20%. Keep it in mind, you are preparing what? March income statement. March income statement. This is annual depreciation. First one is what? Property, plant and equipment. Can you remember? There was an opening balance of 60. Go and check your accounting equation. Property, plant and equipment column, guys. Property, plant and equipment column. Just see the property, plant and equipment column. How much was the opening balance? 60. That's why I told you, student who didn't put that opening paragraph missed the depreciation for this. This was there from March 1st. This was there from March 1st. Then 60 into 20%. See, 60 into 20%. 20 means annual. Then you have to calculate just for a month. So multiply by 1/12. So you will get that. See how it comes? Right? 60 is the opening balance. Just see PP opening balance is 60. You multiply by 20%. 20% means it's the annual depreciation. 20% is the annual depreciation, but we have to convert for March. Monthly depreciation. So 1/12. So then it's, see how much is the answer? 1 is the answer. Right? This is. Then can you remember you purchased another one on March 15th? On March 15th, you purchased a computer. Computer. I will do the separate version for you. Computer was how much? 120. Will say annual depreciation for computer? So we'll say 120. Annual depreciation for computer is how much? 120 into 20%. It is 24. This is for annual. This is for annual. Right? So I will put here furniture and fittings depreciation is 1. Because this was furniture and fittings. Just go and check. Now they produce furniture and fittings. So depreciation is 1. Annual depreciation. Now computer 24 annual. This is annual if you are preparing March income statement. Then March month depreciation. This is annual. We have to divide by again 12. For a 1 month it's 2. 1 month it's 2. For a 1 month depreciation is 2. But look here, from March 15. See, March, you can't take this too. Because this is for the month of March. This asset was not there from the beginning. Asset was there from the March 15. This is monthly depreciation. Out of that, we have to depreciate. Consider how much is the 15 days depreciation. It's 2 divided by 2, because this is for 1 month. This asset is available from March 15. That means you have to depreciate for half of a month. This is March, then 1. So this is the computer depreciation 1. You have to calculate depreciation for 15 days. This is for 30 days. This is monthly means this is for 30 days. 15 days means half. It's 1. Computer depreciation is 1. Clear? Now go for the accounting equation table. Go for your accounting equation table, guys. Because we have to calculate the closing stock. This should be comes from the table. There was the inventory column. There was the inventory column. So inventory column closing balance should be the closing stock. Go for the accounting equation and tell me how much is the closing stock in that equation column. How much is the closing stock? How much is the closing stock in that inventory column in accounting equation, the table we prepared? How much was it? Tell me the answer. Okay. Others also got it, right? How much is it? 50. So closing stock is 50. Now we'll finish off. Sales is how much? 204. Then cost of sales, there was no opening stock. Purchases is how much? 280. Right? No, 200. 280 minus 50 means 230. That's all. Not 280, no? 250 minus 30 is 220. This is 170. Gross profit is 70. Other income is 6. Then it's 70. Clear? Then you take the total expenses to here. 15 plus 7 plus 3 plus 1 plus 1 is 27. How much is the net profit? 76 minus this 49. This is the net profit. 49 is the net. Is it clear? Any questions? Any questions? Is everything clear? Any questions? Let me know. And just share the information about the class with your friends also. Huh? Any questions? So I'm going to wind up the session. Any questions? Let me know. Can I wind up the session with? So we'll meet again this Thursday. Yeah? Seems like everything is clear. and share the class information with others also. Huh? Next will be Thursday. This Thursday, I guess. Right? Thursday, sharp. Huh? Right. Then we'll meet on Thursday. Yeah.